Hello viewers, welcome to my channel. I'm Hashim Ali Khan here. Now I'm going to start the problems on depreciation. So last video I have explained you in detail regarding what is the meaning of the term depreciation, what are the different definitions of depreciation, then what are the characteristics of depreciation, reasons for providing depreciation, then causes of depreciation, factors to be considered for calculating depreciation. What are the different methods of calculating depreciation? All these things I have explained in detail in the previous video. So if you have watched that video, definitely you can easily solve the problem, you can understand the problems. Otherwise, it will be difficult for you. So my suggestion, before watching this video, I suggest you to go to the introduction theory of depreciation, watch the complete video, then definitely you can get a good command on the problems of this topic called depreciation. If you are new to my channel, I suggest you to visit the playlist of my channel. I have uploaded videos on number of subjects: advanced accounting, cost accounting, corporate accounting, business statistics, financial management, investment management, financial accounting, etc. So many subjects videos I have uploaded. Select your concerned subject, watch the video, gain a lot of knowledge from these videos. Now I'm going to start the short problems on depreciation. So before watching the problems, I expect my viewers to take a print out of the problems which I have provided in the link under my description. So go to the description, you will find the link there, take a print out of the problems and keep it ready before watching the problems. Now I'm reading out the first short problem on depreciation. See, the first short problem: a firm purchased plant and machinery on 1st April 2011. Remember the date? 1st April 2011. A firm purchased plant and machinery for rupees 1 lakh. Depreciation is written off at the rate of 10% per annum on straight line method. Straight line method is also called fixed installment method or original cost method. All the three mean same: fixed installment method, straight line method, or original cost method. So here in the very first problem, it is asking you to calculate depreciation at 10% on straight line method. So under straight line method, the amount of depreciation will remain same every year. The annual depreciation will remain same. The firm closes its books on 31st December every year. Show the machinery account for 3 years. So accounts are closed every year on 31st December, right? And the machine was purchased on 1st April 2011. So accounts are closed on 31st December. Purchase the machinery on 1st April. So how many months we have to take depreciation the very first year? April, May, June, July, August, September, October, November, December. 9 months. So we provide depreciation for 9 months in the first year of purchase, right? Now the solution of this problem will be like this. Machinery account. A ledger account is opened having a debit side and credit side. On debit side, we will have date column, particulars column, JF column, journal folio column, then amount. So how many columns we have made? 1, 2, 3, 4. 4 columns we have taken on debit side. Same 4 columns on the credit side: date, particulars, JF, amount. These 4 columns on the credit side. It's a ledger account. Now, when a machine is purchased, previous theory class I have explained you the journal entry when machine is purchased. Plant and machinery account data to bank. Plant and machinery account data to bank, or simply machinery account data to bank. So machinery account is debited. So debit side to bank. Cost: 1st April 2011, April 1. So what is the cost of the machine? 1 lakh. Now we close the year. Every year the accounts are closed on 31st December. Now credit side 2011 December 31st. At the time of closing the accounts, we have to provide for depreciation. The entry for depreciation is depreciation account data to machinery account. Depreciation account data to machinery account. So machinery account credit side by depreciation. 10% of 1 lakh is 10,000. 10,000 rupees is the annual depreciation, per annum depreciation. Here in the first year, the machine is used only for 9 months, from April 1 to 31st December, 9 months. So we multiply 10,000 into 9 by 12. 10,000 into 9 by 12, you will get 7,500. So first year depreciation will be only 7,500 for 9 months. Then we take the balancing figure. Debit side we have 1 lakh. Same line you take 1 lakh. Now from 1 lakh minus 7,500. 1 lakh minus 7,500, you will get 92,500. This is the by balance carried down, balancing figure. Carried down. The first year completed. Now we have to take the brought down balance on debit side. The next year starts from 1st January 2012. 1 year completed, 31st December 2011. Now we are in 2012. January 1st, 2012. To balance brought down from the previous year. This 92,500 I have taken on the debit side. Now year ends on 31st December 2012. So 2012 December 31st by depreciation. Now we have to provide the depreciation for full year, from 1st January to 31st December for 1 year. The annual depreciation will remain same, 10% of 1 lakh. 10% of 1 lakh is 10,000. Every year, 1 year depreciation will be 10,000. Now take the total on the debit side, 92,500. Same line you write on 92,500. 92,500 minus 10,000, 82,500 by balance carried down. Balancing figure. So 92,500 minus 10,000, 82,500. Take it to the debit side. 2013 January 1st, new year starts. 1st January 2013. To balance brought down 82,500. Now again we close the year 31st December 2013 by depreciation. Same depreciation, 10% of 1 lakh, because straight line method, the annual depreciation will remain same on original cost. What is the original cost? 1 lakh. So 10% of 1 lakh, 10,000. Now take the total, 82,500, both the sides. Now 82,500 minus 10,000, 72,500. 72,500. This is the closing balance on 31st December 2013. Now next year is 2014, January 1st. To balance brought down 72,500. It is asking you in the problem to prepare the account for 3 years. So 2011, 12, 13. 3 years completed. At the beginning of the 4th year, the value of the machine is 72,500. That's it. This is the end of first short problem on depreciation. Now, second problem I am reading out. A firm purchased machinery on 1st July 2011. Listen carefully. A firm purchased a machine on 1st July 2011 for rupees 60,000. Depreciation is written off at the rate of 10% under reducing balance method, reducing installment system. Show the machinery account for 3 years, assuming that the books are closed on 31st December every year. Exactly similar to the previous problem. Here the machine is purchased on 1st July 2011 and accounts are closed every year on 31st December every year. Depreciation to be provided 10% on reducing installment method. First problem we have done on straight line method. What is the main difference? In straight line method, the annual depreciation will remain constant. In reducing installment method, the annual depreciation will decrease or diminish. Now see the solution here. Machinery account. Again exactly same ledger account format what we have done in the previous problem. Debit side. 2011 July 1st. The machine was purchased on 1st July 2011. So to bank. When a machine is purchased, entry just now I told you, machinery account account to bank. So machinery account debit side to bank. Cost. What is the cost of the machine? 60,000. Now every year the accounts are closed on 31st December. Now we close the first year. 2011 December 31st. We are closing the accounts. We have to provide the depreciation. Depreciation account account to machinery account. So machinery account credit side by depreciation. Rate 10%. So 10% of 60,000. 6,000. 10% of 60,000, 6,000. 6,000 is the annual depreciation. But how many months the machine is used? 6 months. July 1st to December 31st. 6 months the machine is used. So 6 by 12. 10% of 60,000 into 6 by 12. You will get 3,000 rupees depreciation. The first year depreciation 3,000. So take the total 60,000 minus 3,000, 57,000 by balance carried down. Balancing figure. Now we'll come to the second year. 2012 January 1st to balance brought down from the last year. From the last year 57,000. Last year's closing balance, this year's opening balance. Now close the year. 2012 December 31st by depreciation. Now we have to provide the depreciation not on original cost but on the written down value. What is written down value? The cost minus depreciation is equal to written down value. The cost was 60,000. Depreciation during the first year was 3,000. So 60,000 minus 3,000, 57,000. This 57,000 is called written down value. On this written down value, we need to calculate depreciation. So written down value is 57,000. So 10% of 57,000, 5,700 is the second year depreciation. Now subtract. Take the total 57,000 minus 5,700, you will get 51,300. So 51,300 is the written down value. Value 57,000 minus 5,700. Balance carried down. Now next year 2013, to balance brought down 51,300. This is the balance brought down. Now year end 31st December 2013 by depreciation. Now depreciation will be calculated on written down value. 51,300 into 10%, 5,130. Now deduct 51,300 minus 5,130, you will get 46,170. 46,170 is the balance carried down, balancing figure. Now this will be carried over to the next year. 2014 January 1st to balance brought on 46,170. That's all. So this are the basic first two problems we have done. In the first problem we have applied straight line method. In the second problem we have applied reducing installment method or diminishing balance method. In this case the annual depreciation will remain constant. Here the annual depreciation will decrease every year. That's all. So first two problems we have completed. Now see the problem number 3. 2 problems we have completed. Now third problem you see carefully. A truck was purchased for rupees 80,000. A truck is an asset. The cost of this truck is 80,000. The life of the truck is estimated at 10 years and the residual value at 15,000. So we are given the cost of the asset 80,000, the life of the asset 10 years and the scrap value, residual value is 15,000. Calculate the amount of depreciation to be provided according to straight line method. It's very simple. In this problem, we are not required to make the machinery account or truck account. Here we are required to simply find out what is the annual depreciation according to straight line method. So see the solution here. Cost of the truck is 80,000 given in the problem. Estimated life 10 years. Residual value 15,000. This is the information given and it is asking you to calculate the depreciation according to straight line method. So according to straight line method, the annual depreciation is cost of the asset minus residual value divided by estimated life. This is the formula to calculate annual depreciation. Cost minus scrap divided by life. The cost of the truck 80,000. Residual value 15,000. Scrap value or residual value means same. Divided by estimated life. So 6,500 rupees is the annual depreciation. And according to straight line method, the annual depreciation will remain constant every year. Every year it will remain same. So under straight line method, the annual depreciation of 6,500 will remain constant. That's all. This is the end of problem number 3. Now, see the problem number 4. Calculate the amount of annual depreciation for 3 years by reducing balance method and by straight line method. So we have to find out the depreciation for first year, second year and third year by applying first diminishing balance method, reducing installment method first one and secondly straight line method. Cost of the machinery 20,000. Expected life is 3 years and the rate of depreciation 33 1/3%. and scrap value is 2000. So we are given the complete information. We have to calculate annual depreciation for first 3 years. For first 3 years according to reducing installment method and straight line method. So first I am going to calculate the depreciation according to reducing installment method. Calculation of annual depreciation, reducing balance method. Cost of the machine is 20,000 given in the problem. The cost is 20,000. The first year depreciation. The first year depreciation at the rate of 33 1/3%. What is the cost of the machine? 20,000. So 20,000 into 33 1/3%, 6,667. Subtract it, 13,333 is the written down value. Now next year, second year, depreciation for second year. So 13,333 into 33.33%. So you'll get 4,444. Subtract second year depreciation, 8,889 is the WDV. Now depreciation for third year, 8,889 into 33.33%. You get 2,963. This is the WDV. So it is asking you to calculate depreciation for first year, second year, third year. So first year depreciation is 6,667. Second year depreciation is 4,444. And third year depreciation is 2,963. That's all. This is calculation of depreciation according to a reducing installment method. In reducing installment method, every year depreciation will decrease. Now the same formula we have to calculate annual depreciation according to straight line method. So straight line method, annual depreciation according to SLM, cost of the asset minus scrap value divided by estimated life. In our problem we are given cost of the asset 20,000 and scrap value is 2,000. Life of the asset is 3 years. So 18,000 by 3 is 6,000. So every year the annual depreciation will remain constant. First year 6,000, second year 6,000, third year 6,000. So every year it will remain same. In which method? Straight line. In reducing installment method, every year it is reducing. That's all. So fourth problem we have completed. Now see the fifth problem. An asset is purchased for 50,000. Depreciation is to be provided annually according to straight line method. The life of the asset is 10 years and the residual value is 10,000. So we are given the cost of the asset, estimated life and residual value. You are required to find out the annual depreciation and the rate of depreciation. So we have to find out what is the annual depreciation and rate of depreciation according to straight line method. So cost of the asset 50,000, life of the asset is 10 years and residual value 10,000. Annual depreciation as per straight line method, cost minus scrap by life, cost is 50,000, residual value 10,000. 50,000 minus 10,000 divided by 10, 4,000. So annual depreciation is 4,000. What is the rate of depreciation? Rate of depreciation is equal to annual depreciation divided by cost of the asset into 100. Annual depreciation is 4,000. What is the cost of the asset? 50,000. So 4,000 divided by 50,000 into 100, 8% is the rate of depreciation. So we have completed 5 short problems. Come on, see the sixth problem, the last short problem. Problem number 6. A machine was purchased on 1st January 2011. Depreciation was written off at 10% per annum on diminishing balance method. The machine was purchased on 1st January 2011 and depreciation is provided at 10% on diminishing balance method. At the end of 2013, the depreciated value of asset is 72,900. That means written down value as on 31st December 2013 was 72,900. Find the cost price of the asset. Actually, we have to go reverse back. Normally, we take the cost of the asset. Every year we deduct depreciation, we'll get the depreciated value. We'll get the residual value, that is residual value, or we can say written down value. But here written down value is given and we have to find out the cost price of the asset. So asset was purchased on 1st January 2011. At what price it was purchased? Not given. We have to calculate. Every year depreciation was provided at 10% per annum on diminishing balance method. So after providing depreciation on 31st December 2011, 2012 and 2013, 3 years. After providing depreciation after 3 years, the depreciated value, written down value of the asset is 72,900, and we have to find out what is the cost price of the asset on 1st January 2011. Now see here, finding the cost price of the asset, that's what we have to find out. Let the cost price of the asset on 1st January 2011 be X, rupees X. That is the cost price of the asset we have assumed on 1st January 2011. The cost price of the asset on 1st January 2011 is X rupees. At the end of the year, 31st December 2011, we provide depreciation at 10% on X rupees. So depreciation up to 31st December 2011 at 10% of X, because the purchase price is X. So X ka 10%, 0.1X. 10% of X is nothing but 0.1X, right? So X minus 0.1X, because we have to deduct the depreciation. So X minus 0.1X, you will get 0.9X. This is the WDV at the beginning of the second year. 1 year completed. At the beginning of second year, the written down value of the asset is 0.9X. Now at the end of second year, 31st December 2012. 31st December 2012. Depreciation up to 31st December 2012 at 10%. Diminishing balance method we are following. So we calculate 10% of 0.9X. This is the written down value. So 0.9X into 10%. So 10% of 0.9. 10% of 0.9, you will get 0.09. 0.09. So 0.09X is the depreciation. We are calculating on this 0.9X. So 10% of 0.9X, 0.09X. Now do we deduct 0.9 minus 0.09. 0.9 minus 0.09, 0.81X. This is the WDV at the end of second year or beginning of the third year. Now third year. Third year is 31st December 2013. Depreciation at the rate of 10%. So 10% of 0.81. 10% of 0.81 is 0.081. 10% of 0.81. 10% of 0.81X is 0.081X. Now you subtract 0.81 minus 0.081. You will get 0.729. 0.81 minus 0.081. You will get 0.729X. What is this 0.729X? Depreciated value or written down value at the end of third year. At the end of third year. WDV of the asset on 31st December 2013. Now in the problem it is given. It is given in the problem that WDV of the asset as on 31st December 2013 is 72,900. On our assumption basis, the WDV comes to 0.729X. On the basis that the beginning of the period, the asset value was X. When we have supposed X as the purchase price, cost price of the asset, we are getting WDV 0.729X. Whereas actual WDV given in the problem is 72,900. Now this 72,900 is equal to 0.729X. This is the depreciated value we got and this is the depreciated value given in the problem. Both are equal. Now 0.729X is equal to 72,900. Keep X on left hand side, LHS, and bring this 0.729 on RHS. So it will become divide because we have multiplication in between. 0.729 into X. So into will become division. So X is equal to 72,900 by divided by 0.729. X is equal to 1 lakh. Now what is X? We have supposed. X is nothing but the cost price of the asset on 1st January 2011. Therefore cost of the asset on 1st January 2011 is 1 lakh rupees. That's it. So this is the end of problem number 6. Totally 6 short problems we have completed. The next video I'll start the main problems on depreciation. So if you are satisfied with my lecture, please give a like to the video. share it in your group, in your friend circle, so that more students can get the benefit from this channel. Give your comments on these lectures and subscribe my channel if you have not yet subscribed. If you are new to this channel, subscribe my channel. I am providing a number of knowledgeable videos on different topics. Okay, we'll continue this in the next video, the main problems on depreciation.